Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXPesa. So today, we are going to be having a very interesting session, trying to understand what's currently happening in the markets. So we'll be looking at the key events that happened yesterday, key events that we're expecting today, some version of what's currently happening with the Bank of Japan. And once we get through this, we also look at our technical analysis and try to understand some key price levels as well as key market patterns on the charts. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So good morning, Caspar, and thank you for joining the session. All right, so let's get things started. And hello, Richie. So first things first, we look at the economic calendar. So yesterday, we had quite a number of market events, beginning with inflation data coming from Australia, where inflation was on the rise, jumping from 5.2% to 5.6%. So on the other hand, looking at the quarterly data, there was an increase of 1.2% in the third quarter compared to 0.8% in the second quarter, meaning that inflation is currently on the rise in Australia. So German IFO business climate survey came in better than expected at 86.9 compared to 85.9 expected, and of course 85.8 previous reading, meaning that the survey is showing optimism that conditions or business conditions in Germany are improving. So later on, we had a interest rate decision coming in from Canada, where the Bank of Canada members decided to hold interest rates at the current level of 5.0%, which was the same as expected and the same as the previous reading. So later on, we had the Bank of Canada press conference, a speech from ECB President Lagarde, and of course, a speech from Fed Chair Powell. Early this morning, we had a speech from Reserve Bank of Australia Governor Bullock. Then we had Australian import prices quarter over quarter, which came in better than expected at 0.8%. So Spanish unemployment rate moved higher to 11.8% compared to the expectation of 11.5 and the previous reading of 11.6%. So going forward for the rest of the day, we have quite a number of key events, and key among them is the interest rate decision by the European Central Bank. So the ECB is expected to hold interest rates at the current level of 4.5%. And this is supposed to be or expected to be bearish for the euro, since other economies have held interest rates at much higher levels. For instance, we have seen Canada at 5.0%, and of course, for the US, it's 5.5%. So this is expected to cause volatility in the European equity indices, as well as on the euro against other currencies. Then later on, after the announcement of the interest rate decision at 3:15 p.m., we will be seeing the ECB press conference at 3:45 p.m. So a majority of the volatility on this data announcement is expected to come from the ECB press conference as the ECB members clarify the direction of interest rates and, of course, the economic conditions that led to the decision that they will make at 3:30 p.m. So, sorry, 3:15 p.m. So in this case, I expect to see some volatile euro for the day. So we'll also be having news coming from the US at 3:30 p.m. and this is about economic growth. So advanced GDP quarter over quarter will be released at 3:30 p.m. At the same time, we'll also be looking at the weekly unemployment claims, which are expected to come in at 208K compared to the previous reading of 198K. So advanced GDP is expected to double from the previous reading of 2.1% to 4.5%. So if quarter over quarter GDP jumps 4.5% higher, then it would mean that Jerome Powell has to do a little bit more. And this could pressure the Fed to go for another rate hike, especially seeing a very strong economy and also observing that interest rates are currently rising in the US. So this will be very interesting data going forward. So there is a high likelihood that if GDP is stronger than expected, then we could be seeing investors betting on another rate hike, which could be very strong for the dollar. So also, one key thing to mention yesterday in the evening, we also had crude oil inventories data, which showed a big jump from the previous reading. So the previous reading, we had negative 4.5. Remember, this is a weekly data point. So we were expecting this to improve to negative 0.5, but the improvement was much higher to 1.4 million barrels. So what this means is that there is more supply of crude oil in the US, and this basically implies lower prices. So these may explain the oil performance yesterday. So another news, we have quite a number of things happening. So corn declines further amid heavy rains. FTSE 100 index opens 0.84% lower. The DAX opens 1.37% lower, basically showing that overall European equity indices have been trading lower since the market opened this morning. So the French 40 index, CAC 40, opened 1.13% lower. Philippines unexpectedly hikes key rate by 25 basis points to 6.5% in a surprise off-cycle meeting on October 26th. That is earlier today. So European shares tumbled to near 10-month low. So European stocks were sharply down on Thursday, with Frankfurt's DAX 40 tumbling more than 1% and reaching 14,700 mark, its lowest level since January 6th. Furthermore, the pan-European stocks 600 fell by 0.8% to nearly a 10-month low of 430 points as investors prepared for the ECB's meeting and a day filled with earnings releases across the region. So in corporate news, Mercedes-Benz reported a drop in Q3 earnings due partly to lower deliveries, while chemicals maker Waka Chemi cut its full-year guidance, citing weak demand in a large number of industries. Elsewhere in Europe, Volvo Cars reported a rise in operating earnings. Sabadell posted 46% rise in net profit. BNP Paribas posted in line. Q3 profits steading declined, and Swedbank reported a bigger than expected rise in that quarter net profit. Finally, Standard Chartered, which is a big bank headquartered in the UK, Q3 pre-tax profit fell much more than expected. So there's quite a number of highlights, and I believe the forecast today will mainly be on the big tech earnings. So we have already seen Microsoft reporting better than expected earnings, slight slowdown on Google, and now we focus on two more big tech earnings, and that would be Amazon as well as Facebook. So today, Facebook earnings will be on forecast today. And of course, we know that it was renamed to Meta Platforms. So key highlight and focus for the day is ECB set to pause rate hikes. You also want to think about US GDP, which is seen at nearly a two-year high. So European shares tumble to near 10 months lows, and Philippines unexpectedly hikes key rate. So on other news, we have Spain jobless rate unexpectedly rising in Q3. Singapore manufacturing output shrinks at softer pace. And of course, the Japanese yen weakens past the key 150 level. So just realizing now that I wasn't sharing my screen. So apologies. So hello, Harry. I can see Gatwiri in the house, Apollo, Harry, and Joshua. So let's get straight to the technical analysis part of today's presentation. And I'll be starting with the most important chart of the day, which is USD JPY. So as we have been talking about this for quite a period now, we know that the 150 price level is very important for this pair. So the main reason that this level is very important to every trader is because the last time the USD JPY got to 150 and above, there was a direct intervention from the Bank of Japan, which led to a big sell-off in USD JPY. So now the market has gotten back to the same level. And the last time you saw the USD JPY getting to the 150 price level, it led to a big sell-off here. And this was on a Tuesday, about 3 weeks ago. So this big sell-off was as a result of the Bank of Japan intervening in the currency market to support the Japanese yen. What happened after that is that the market continuously made a recovery. So from here, you can see the market recovering, trading sideways for like a week, moved even higher, and then traded within these two trend lines for 2 weeks, broke towards the lower side, and early this week, we had this strong bounce happening here. So on Tuesday, we had a very nice signal here indicating an entry opportunity. The market rallied to 149.698 and eventually breached the 149.992 yesterday. So today, or after yesterday midnight, we have seen an acceleration of the USD JPY currency pair. And once we go to this level of 150.441, you can see some footprints of the Bank of Japan attempting to intervene in the currency market again. So this intervention sought to push the USD JPY back downwards, but then it didn't have much effect because the market immediately pulled back higher. So in this case, if you're participating in this market, there is a high likelihood that the Bank of Japan could intervene again, and this would mean a sharp decline in this price, and we could be seeing the market retesting the previous low. So something along these lines. So there's a likelihood we will be seeing the USD JPY dropping all the way back to 148.285. And this is subject to the Bank of Japan intervening in the currency market again. So as we all know, this intervention will not be announced. It's not something that they usually announce. So it just happened impromptu. So you just realize that the market is just moving with high volatility. And at that moment, you know that it's the Bank of Japan intervening. So in this case, if you are long on this pair, or if you have been buying USD JPY, you have to be very careful because any form of intervention would see a very big sell-off in this pair. So next, we look at the dollar index, and clearly the dollar index has been making some good bullish momentum moves. And these moves have seen it bounce from this low here, and then rally. This was on Tuesday. Then on Wednesday, we broke this trend line. And of course, today you can see the continuation. So with the dollar index strengthening yet again and breaking above this trend line, then it basically means that other pairs are suffering from a strong dollar. So from the pound USD perspective, you can see the immediate reversal that happened on Tuesday, then Wednesday continuation, and today we are almost bouncing from this lower trend line here. So now, as we head on with the day, and we expect the GDP data from the US, so if it's higher than expected, then we could be expecting the pound USD to break below this level and perhaps even trade lower. So from what we are seeing on the 4-hour chart is a market that found a bottom here, rallied to this point at 1.23363, pulled back down and then went high around 1.22597. And then from here, we are seeing an acceleration downwards. So this basically shows a market that is continuously forming lower highs. And now we are on the verge of forming another lower low. So there is a likelihood that this trend will continue, especially if we get a very strong GDP number from the US. So as for Euro USD, this is where we are expecting the most volatility in the markets today. And this volatility is as a result of the ECB rate decision. So there's overall consensus or expectation that the ECB will hold rates at the current level of 4.5%. And this could prove to be quite weakening for the euro. So in this case, I expect to see some further downside happening from this chart. But from a technical perspective, the Euro USD is currently trading at a major support level. So this is a key level decision point. So I would say the area where the trend line coincides with the candlesticks basically marks a very interesting point. So in this case, I would be very patient to see what happens with the news. And of course, if there's a surprise rate hike, then the euro strengthens and perhaps gets to this level of 1.05978. But then if that doesn't happen, there's still more room for downside. And there's quite a number of key levels to watch, including a 2-week low of around 1.04,973, and of course, all the way down to around 1.04483. So there's that likelihood that the market will take a rate pause quite negatively, and this could send the euro tumbling all the way back down. But then if there's a hawkishness indicating another rate hike, then in that case, we could be seeing the euro making a very strong bounce. So as for now, we don't know what will happen. So we just be patient and wait for the ECB decision. So as for USD CAD, this is what we are seeing. From the forward chart, it's a very strong dollar against the Canadian dollar. And now we are anticipating the GDP news. So in this case, if the dollar continues strengthening, then there's quite a number of levels to watch. One of them is the previous high that we saw here. So it was a major resistance. And of course, even from here, it was also a major resistance. So once the USD CAD gets to this level, then there's a high likelihood we'll be seeing some resistance and perhaps some form of pullback at 1.38605. And this is on the daily chart. So the last time we saw the price trading above this level was on 14th of October last year. Then we saw the price trade here on the 10th of March this year. And now the market is on the verge of getting back to the same level. So having broken the previous high that we saw 3 weeks ago, there's a likelihood we could be seeing some further upside in USD CAD. And right now, what we are looking at is basically a retest. So a very short-term movement that usually happens when a key price level has been broken. So after breaking above this high, the market is pulling back down to this area at 1.37829, and this remains our key price level for the day. So the idea is to observe if there is some form of bounce, and if there is a bounce, then we trade targeting this area here at 1.38605. But then if that doesn't happen and the market keeps going downwards, then this becomes our key level target. So we start now focusing on this previous high, which was acting as a resistance for a couple of days here. And now it may be acting as the support level. So as for gold, we are continuously seeing increased momentum to the upside as a result of investors basically seeking for safety following the current war between Israel and Palestine. So from the forward chart, this is how it looks like. So all we are seeing for the past 2 straight weeks is the price of gold gaining against the dollar. And now we are about to retest last week's high. So there's a good likelihood that we will be seeing a big spike in gold, perhaps attempting to retest this area here. So sometimes these resistance levels will act as magnets, and price will tend to go towards those levels. So in this case, I expect a big spike in gold to hit 1997, and this could extend all the way to 2000, which is a key price level for gold, before we see any other price action. So we have already broken above a key price level that was holding gold backwards, and this was the 1984 price level. So notice how gold was unable to break this area for quite a period of time, and now we can already see the price breaking above that level, and there's a good likelihood we could be seeing gold touching the 2000 price level within the day. So as for the Australian dollar, a very strong bounce from this area here in correlation with gold. So we have been seeing the price oscillate between these levels. So we used to have this trend line, but then it's no longer acting as the support. So the support has shifted to this area, and I think this is our main idea for the day, where we are seeing a very strong bounce in the Australian dollar against the US dollar. So from the 1 hour chart, we have had 4 consecutive hours where the Australian dollar is gaining against the US dollar. So this may continue for the rest of the day. It has already erased all the early morning gains. It's bouncing off from a very strong support level. And on the forward chart, we have this, we call it a morning star candlestick, where at one point the trend was bearish. We have a small body candlestick here, indicating some low volatility, and then the buyers enter this market strongly. So I expect this reversal to continue and to see some further upside happening in AUD USD currency pair. So US equity indices, beginning with the Nasdaq, are currently enduring a much bigger sell-off than expected. So this basically means that this could have possibly been the highest point for the year, which was experienced on 19th July. And since then, we have had these proceeding highs that are getting lower and lower, and lows getting lower and lower. And finally, the market has broken below the trend line. So this, it could indicate some much selling pressure in the Nasdaq, and I expect this form of momentum to continue. However, whenever a major trend line is broken, sometimes we may experience this market going back to retest the trend line before continuing in the original direction of the break. So this could also be playing out in the books today. From the last 1 hour, we can see a rejection of lower prices. Now the market is attempting to go up. The idea overall is to keep looking for short selling positions. Even from the daily candlesticks, you can already see this is happening. It's also important to note that the difference between the highest price and the current price of the Nasdaq is over 10%. This is 10.62%. So normally, when a stock market index is down 10%, then we normally say it has entered correction territory. So these other pull could have been taken as pullbacks, but now since it's above 10%, it's usually a book signal indicating that this stock is reversing in terms of trend, and now investors expect to see some further downside. So in this case, I would be on the lookout for short selling positions rather than trying to buy here when the overall trend is bearish. So it's happening across board. So if you go to the Dow Jones and you look at the daily chart, then you compare between the highest price that we have seen in the year, right here, and the current price, it's down 7.68%. So for the Dow Jones, it has not yet entered a correction territory. So it's still within the 10% limit. But then looking at the nearest lows that we recently saw here, the Dow is currently struggling to get lower, but then the target remains the same. I expect to see some further downside down to 32,812. So for the S&P 500, we have had this break happening. So after hitting this bottom here, the market bounced quite strongly, but then continued moving further downwards. And now you have a break below, indicating some further downside momentum. And of course, if we measure for the S&P 500 between the highest price and the current price, we can see that the index is down 9.58%, meaning that today there's a likelihood that it could enter correction territory if it goes below and gets to 10% down from the recent top. So as for UK oil, yesterday we had a premium signal when we had this candlestick form a very strong wick to the downside and then closing higher, indicating a very strong entry of buyers. And now we are seeing this much needed strength coming in from buyers as oil prices attempt to make a recovery. So remember, oil prices have been pretty much bullish for quite a period of time. So I would say in the last 2 weeks, we saw some good rally happening in UK oil or Brent oil. Then this week, we started with a big sell-off. But then from the price action yesterday, the market is already attempting to erase all the losses. So there's a good likelihood that oil will continue recovering for the day. And we could be seeing oil attempting to retest the $90.847 per barrel levels. So European equity indices are currently experiencing a big sell-off. So for the French 40 index, I expect the market to retest the 67.90 price level, going further back downwards. So if I was to clean this chart, add a template here, zoom out, then you can already see there's a nice trend line shaping up here, acting as resistance. So the market broke the trend line to the upside, but was unable to accelerate higher. And now we start working with this one as the major resistance level. So in this case, I still expect to see some further downside and potentially a retest of the previous low. So we could be seeing the market dropping further back downwards and getting to these levels, especially after we saw earlier in the week that European flash manufacturing and services PMI are currently weakening. So for the Euro 50 stock market index, we had this inverted head and shoulder pattern indicating a reversal. So the market pushed higher, but then found a very strong resistance around this area. So notice the number of times that the market was unable to break this area here. So this is a 1, 2, 3, 4, 5. 5 times unable to break, and now the bearish momentum continues. So from the H1 chart, this is how it looks like. So we are basically looking at a market that is forming significant lower highs. So with this in mind, then we expect to see some further downside and perhaps a retest of the previous low, which was the peak of the inverted head and shoulder. So right here around 3,991, we could be seeing the Euro 50 cash index continue selling off. So the bullish momentum in Bitcoin has continued to prove very strong. So after the big jump that happened on Tuesday, the market has consolidated around that area. We haven't had any major changes. So now the point is to focus on this area here and then potentially look for a breakout in either direction. So in this case, it's a very clear format. You can easily see how the market is forming this support and this resistance, and a break could happen in either direction. So we could be seeing Bitcoin breaking higher or lower. But then once it happens, if it breaks the lower trend line, we go short. If it breaks the upper trend line, then we basically look for bullish positions. So as for New Zealand USD, we are seeing also a bounce in correlation with what's currently happening with Audi USD. So I would expect the New Zealand USD to at least make some good recovery against the dollar as we wait for the GDP news. US oil, very strong correlation with UK oil. So I still expect to see some further upside. Then for the US dollar trading against the Swiss franc, we had a breakout here, basically meaning that the dollar is now recovering against the Swiss franc, and we could be seeing some further upside as we continue the rest of the day. So the German 30 index also breaking even higher, but then we are close to a point where the market could start pulling back. So in this case, if you are to think of this as the major resistance line, let's say this one, with an outlier here and another outlier here, then we can easily assume that this market is currently overbought and due for some form of pullback. So I would be expecting to see some form of pullback happening in the German 30 index. So pound yen made a good rally, attempted to form a higher high, but then it was unable to do it and pull back downwards. And as we see the Bank of Japan attempting to intervene in the exchange rate of the yen, then we could be seeing the yen continue to strengthen and a jump higher may suffice as we continue with the day. So we can already see how this support level has been playing out for pound yen currency pair. And now we have seen the market attempt to go down and then fail. So we could be seeing the pound attempting to gain against the yen. But then with the intervention, it basically implies that there could be a break. So any form of intervention by the Bank of Japan would mean that the market now trades lower. So the trade that we had discussed early in the week, this was when the Euro JPY currency pair was trading at a resistance level that has been holding for quite a period. We basically saw the market basically finding a very strong resistance there. And now we have experienced a very nice pullback. So it was a major resistance here and now a major resistance here. And immediately after that, we saw the market pull back downwards. So this basically happened on Tuesday, then on Wednesday, some sideways momentum. And today being Thursday, you can see the attempt to break below when the Bank of Japan was basically intervening in the currency market. But then that intervention failed. So in normal circumstances, this would have been a very nice idea to go for a bullish trade, targeting another bounce and a rally towards the upper trend line. But then with the Bank of Japan threatening to intervene again, then the idea is to look for short selling positions, especially if the intervention was to happen. So currently checking to see your responses as well as your questions. So there was a jump in bond yields when US September new home sales rose more than expected to a 20-month high. A hawkish factor for Fed policy. Expound the above concept. So the Fed has basically been looking to slow down the US real estate market. So by slowing it down, it basically means to slow down the prices as well as the sales of new homes. But then when you see home sales being on the rise, meaning that people can afford to take even more mortgages when the interest rates are high and mortgage rates have already hit 8%, then this basically reflects a very strong economy, but the Fed is still trying to slow down through its monetary tightening path. So this basically means that there is more pressure on the Fed to hike interest rates on its next meeting on the 30th of October. So this explains why a rise in home sales basically pushed investors to bet on a stronger dollar because the Fed would potentially hike interest rates. And of course, the bond yields would also be expected to be going up. What's your outlook on the dollar till November 1st rate decision? I expect investors to be front-running the Fed. The Fed has continuously said that they are looking to implement one more rate hike before the end of the year, and there's a high likelihood that this rate hike will be happening this month. So with this potential in the books, the US economy being pretty strong and inflation being back on the rise, then there's that likelihood that the Fed will go for that rate hike. So in that case, investors already know that, and they're already betting on a strong dollar. So that's why we are seeing a very strong DXY. So as we approach the November 1st, then I expect to see some further strength in the dollar against other currencies. So I think an easy short would be Euro USD. So does market react more to negative news or positive news? Think about it this way. There's this Wall Street saying that commonly says, bears climb up the stairs, bulls climb up the stairs, bears jump off the window. So when the market is going up due to positive news, it's a step-by-step process. So you'll see more of a staircase climb. But then when there's panic and bears are in control of the market, it's basically jumping off. So markets tend to react more during negative news compared to positive news. There's a request to share my Telegram group link. I will be sharing that. If you get a higher GDP, Nasdaq may retest the broken trend line. Higher GDP basically means that the economy is strong, so that could be positive for the Nasdaq. But then it could also be very positive for the dollar, so we could be seeing both assets flying higher. But then my bet is that if there's a stronger GDP, then in that case, trading a strong dollar against weaker currencies might be the way to go. Please explain the correction in 10% again. Yes, whenever a stock is on a bullish market, if it drops 10% from its recent high, then it's considered to have entered a correction territory. But then if it has gone down 1%, 2, 3, 4, 5, as long as it's not above 10%, it's still considered as a pullback and a continuation of that trend is expected. But then once it breaks the 10% barrier, then investors tend to change their thoughts about that asset, and then they start thinking of going short rather than continuously buying that asset. Why is the Nasdaq bearish yet there is not very bad earnings report from big tech? Yes, we have seen some really good earnings, especially coming from Microsoft, Coca-Cola, Visa, and so on. But then the risk of having the Fed continuously tighten policy becoming more increasingly concerning for investors. So if the Fed is not looking to cut interest rates anytime soon, then that tightening is expected to have an impact on the economy. And this may explain why we are seeing a lot of selling. So at the same time, we are seeing the risk assets make some good rally. That is, risk of assets, or basically assets that are considered as safe havens. So we have seen a very strong rally happening in Bitcoin. We have seen a very strong rally happening in gold. And this basically means there's that rotation currently happening where investors are moving from risk on to risk off. So when you see that cycle happening, then that may explain why the Nasdaq is moving back downwards. So currently, the earnings are not very strong enough. So while the Magnificent Seven stocks are doing well or reasonably well, all the other stocks within the S&P 500 are not doing as well. So this basically means that 7 stocks supporting the entire stock market is not evidence of a very strong economy. So in that case, investors are betting that the high we saw on the Nasdaq in July may as well be the highest point we are seeing the Nasdaq this year. So in this case, they're expecting some bearish momentum going forward towards the end of the year. So I'm assuming I've answered all the questions. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. So remember, today is Thursday, so we will be looking to discuss the result of the GDP news. So remember, the GDP news is coming later in the day. So the GDP news will be exactly at 3:30 p.m. The ECB news will be 3:15 p.m. And of course, the ECB press conference will be at 3:45 p.m. So after the last data announcement at 7:45 p.m., we will be having another webinar. It's called the Market Pulse series, and this will be at 8 p.m. So just in case you don't forget, make sure that you subscribe to the FX Pesa channel so that you will be notified once we go live. So during this session, we will be discussing the results or the outcome of the ECB press conference, as well as the GDP data in the US and how the markets may react to that, with a focus on what may be happening next week. So remember, next week is when we have a flurry of economic news coming all over. So first, we'll be looking at the Bank of Japan interest rate decision. That will be a key event for next week. Canadian GDP, and then I want to fast forward here. JOLTS job openings, and then the federal funds rate. This will be on the 1st of November. Then after we look at the federal funds rate, we'll also be looking at the Bank of England monetary policy decision. And of course, it will be the first week of the month, which basically means we get to see the non-farm payrolls, which will be released on Friday at 3:30 p.m. together with Canadian jobs data. So knowing that the market are anticipating a key number of interest rate decisions, then we'll be discussing that further during the session.